Hello traders, how are you? Vladimir here from Traders Academy Club. And in this video, I would like to take you step by step through what is the price action, what does that mean, price action, how to take this term into your trading world, and how to use it properly from my point of view. But before I go to the charts, if you are new to this channel, welcome to our fantastic community. I would like to welcome you and to invite you to subscribe to this channel. Please follow the subscribe button below. Just remember to enable the notifications so you know when there is a new video and new trading ideas or educational content available for you. And also, I invite you to join us in our trading family, Traders Academy Club, and to learn all my trading techniques as they happen, real-time, with real-time trading ideas, real-time trading opportunities, and mainly real-time trading education, exactly with the same techniques you will see here as well. So let's begin. I do have one request from you. Please dedicate 20 seconds of your time. If you find this video helpful and educational, your support is very much needed. And please hit the like button below this video. Drop some feedback in the comment section. 20 seconds of your time is huge help to me and this channel. Also, feel free to share this video with anyone who you believe can benefit watching that. So let's begin to present the technique which I will want to do now. I would like to go directly to our Traders Academy Club trading journal, where we record all our trading ideas, and in real time discussing here in the ideas and of course the strategies and the management applied. So I would be covering 3 trades directly from Traders Academy Club, and I would like briefly to explain what is the price action, the way I see that, and how you can apply that in your trading as well. Please be aware, some of the things you might see already, some of them might be completely new for you. What I am presenting is something I am using by myself, and for complete transparency, it's important that you know I myself also love to use with indicators. However, for me, indicators is nothing more than indication. Yes, in the past, many years ago, I was a huge fan of indicators, and I still love them. But life proved me during the all the trading experience, as much as indicators are important, nothing can beat the price. And what you see are on the price, and what you are able to read on the price is second to none. No indicator on earth can replace that. Indicators can indicate, indicators can help, and they can visually point you in the right time and the right place. But without the price, ability to read the right price movement and to deal with that, no indicator on earth can be really helpful. Okay, indicators, huge help for those of you who love to use them, but remember, don't rely on them blindly. Indicators without the price means nothing. Okay, price without indicators can mean everything. It's very important you understand this equation. So I will be presenting 3 trades directly from the Traders Academy Club Trading Journal. I'll be talking about the EuroCAD bullish idea, S&P bearish idea, and Aussie dollar bullish idea. And I'll show you here that even though the price reading could indicate a specific movement, sometimes it can fail, and it's important you understand that. We'll discuss also about the management behind it. So let's go with the first idea, and that was the S&P bearish idea. So I want, again, for full transparency, I myself use indicators. So you would see the indicators here. However, everything I present you here could be used without indicators. Indicators with price action is sugar from my point of view, Price without indicators can be amazing as well. Indicators without price would be lacking this final fine-tuning for your trading. So it's important you hear carefully. Again, if you like this video, please hit the like button, share this video with anyone who you can think can benefit by watching that. And if you want to take it to the next step of your trading and really see how it's implemented in real time and to learn in real time, I invite you to our Family Traders Academy Club. So I hope to see you with us. Now, let's begin. S&P, what do we have here? But you know what? Let's do it the other way around. Before I go to the charts, let's talk about the techniques. What is the price action? I love to work with that in terms of price reaction. Okay, a lot love to call it price action, many different names out there. And as a certified financial technician by myself, trust me, names as all around. What was invented years ago, a lot of traders that come nowadays, they love to flip the things and call that with different names. Totally fine, nothing wrong with that. Everybody, as long as everybody can connect to something, I'm good with everything. But it's important to understand the whole thing behind it. What is the price action? For me, it is a price reaction. Reaction to what? Reaction to specific reasons on the market that caused the buyers to buy, the sellers to sell. And here is a very important thing. I will go blank screen now, so don't get scared the chart are lost and my image might be lost as well. So what is a situation when the buyers are in control? When buyers take any instrument and they buy, what happens to the price? It goes up. When they release, it goes down. Buy again, up. Release down, buy again, up. This is how a bullish trend is built. A series of higher highs, higher lows. It's called a bullish trend. For a seller market, it's the vice versa. High to low, the new low, pull back to another lower high, and a new low, creating for us a series of lower highs, lower lows, and we're talking about at least 3 in a row. So trend structure or trend price action, price reaction, trending structure, pattern, whatever, you name it, is a situation where we have a sequence of highs and lows in the same direction. Correction is anything that comes afterwards, right? We got a trend, every trend later or sooner would get correct, and usually a correction could be in one strong wave which simply would bounce from the lows and continue, in 2 wave structures, so something like that, okay, with a continuation, or a sort of consolidation before a breakout and continuation. That's the usual 3 price reactions after the trend, the initial trend, has reached a certain level, and you would see these levels in a second, and afterwards temporary stoppage, right? The buyers reload their weapons and they shoot and the price flies again. Of course, the same is to the downtrend. I just don't want to waste the time on drawings on everything. So this is in terms of price. Now, the same happens on candles, and it's very important you understand that. Okay, now let's draw and about candle patterns, which, by the way, in my blog, you can find the link right now. You can download free ebooks on the candle patterns to get more familiar with these terms and how they look like. Okay, so feel free. Also, on my YouTube channel, you can just find a lot of amazing videos that could be helpful for you in every subject you would like. So scroll around and you would find, explore around, and you would find all the materials you need. Let's talk about candles. Candles is basically built from what? Spikes and body, right? This is a body, that's the spikes. Now, as you can see, which candles would have more significance? Number 1, 2, or 3? The answer is number 1 and 3, because the body, which represents the real control between the buyers and the sellers, the open of the session and close of the session, that's the real fight between the buyers and the sellers. As long as the body is the bigger part of the candle and not just the spikes, the body is significant. That's the case if you got several of them in a row. Okay, so let's say you got a clear trend, and then what happens is, okay, we break the sequence of the last two falling candles by making, again, look what happens here, 3 candles in a row making higher highs, higher lows. Okay, so it's the same of this structure we spoke about before. Same logic. In these 3 sessions, 3 periods, okay, the buyers were in control. Same exactly in the opposite direction. Okay, the sequence is broken when the last 2 candles of the up move are broken, and we have 3 lower highs, lower lows. Same logic behind the downtrend. So these are very important things to understand when the trend is going, when it's everything in the right direction, and when it flips. Okay, so this is how it looks like in terms of swing highs and lows and candles. Now let's talk about the next step, and this is the price action in action. Okay, so we have trend. Later or sooner we will get a pullback or correction, and these pullbacks usually go back to the previous low zone. Now, not always it will really touch that, but in majority of cases it will, and even create some sort of a false breakout. And here is your opportunity to look for these buys and further continuation right here at these zones. So if you manage to analyze a clear trend, of course in multi-time frame it will be much better, and you gotta pull back and it is rejected. So what do I mean by that? It's very important you understand that it's not just goes through that, right? But it goes down and rejects here. And what does that rejection look like? You would see the candles here slowing down and then breaking, right? The sequence is broken and highs and lows begin to be created. If that happens, this is a good indication that the buyers are really trying to take the control. Okay, so this is the basic of the levels. And to take it to the next level a little bit, I would like to give you this brief explanation. And right now on the right top corner, and also in my channel, you can find a video called the price action strategy in 3 simple steps. Watch that. It will give you the full idea of what I present here. So what happens is trends, okay, tend to go in this variation. When a low is broken, the market, once the correction happens, would go and retest the previous high before the broken low. If that goes through, the next level to watch is basically the next highs. Why does that happen this way? Because think about it, what happens here? Sellers took control out of the buyers. What happens here? Buyers let it go, sellers take the control. What could happen if the price rejects? We don't know. It will definitely do that, right? But if it reaches this level and again start to break the sequence, make the lower highs, lower lows, it is indication this level is respected by the same sellers or different sellers which took the control again in the previous trend. Okay, this is the importance of these key levels, and that's what you would want to pay attention to for rejection. Now, to present that, as I said, let's take a look on the strategies. Okay, so what happens here on the S&P? We had a clear uptrend, no doubts about that. And on the most recent leg here, what did we have? Another inner trend, right? So what happens here is, let me just draw it in different color. Okay, as you can see, highs and lows being taken. And here, right, we have a flip. So from higher highs, higher lows, we have a fake high and then lower lows for the first time. Indication that something potentially reverses. When we take a look on the structure itself, look how it's rounding and slowing down and flipping, making lower lows. Now, the very important part here, the last 2 candles right? Were broken before. Two heavy candles here and here. So the two big red candles, right? And look what happens here. 1, 2, 3. 3 candles in a row. Lower highs, lower lows here. Classical indication that, and look at the candles. I'm not talking about huge spikes and small bodies. It's big bodies candles versus tiny spikes. Great indication of the sellers. So for me, it's an indication of sells and further pull back down. What are the levels to pay attention to? So of course, first of all, this low, and then the next low, the next important low. We have one here, and we have, I would say, one here because it was respected twice, which also fits in a Fibonacci, magically or not, right, of the whole trending structure. So as the price goes, I want to see if this one rejects, I would consider management. If not, then I would consider my management around the next levels. And that's pretty much what happens here. So look what happens here. As we reach to this zone, right, it's not rejecting. Lower highs, lower lows in play, and nothing changes. Not here and not on the lower time frame. So we continue further. No problem. I'll be heading to my next target. This is, again, the logic of how the price action and reaction happens from specific levels. Okay, now look at the same logic. As we got this move down and we got a pullback back to where we are going. So this low was broken. What was the high before? Here. As we come here, I'll be looking for the rejection. Last candles of the up move to be broken and make the lower highs, lower lows. This is the place where I know, okay, sellers potentially take in. Now, for those of you who do love to implement indicators in it, like myself, as I explained, I am a big fan of price, but I'm also a big fan of indicators. And when I spot, for example, situations hidden divergences, like in this one, it's just a great sign for me that my chances are with me. And here is an example for a next trade, which in that case lost. And it's important you know that it doesn't matter if your read is super duper perfect, sometimes it will still lose, and that's more than fine. Risk reward. Make sure that the profits you make, like I showed you here, right? The profit one would pay you more than the losing ones. And then even with as low as 50% success rate, with anything more positive than one-to-one risk reward, you would start to generate great income. And with such techniques, you can head towards the 70, 75, or 80%, of course, again, in your experience, right? With the expertise, your level would go higher. And we are working here also with around 75, 80% success rate of the ideas. And the whole trick here is not only success rate, but the risk reward. In the times you are right, make more, and in times you are lose. I'm talking about average, of course. So what did we have on the OZ dollar? We had a downtrend, no doubts, right? Bearish trend, lower highs, lower lows. You can see a lot of them, right? What happens eventually is the move down flips and starts to make higher highs. Retested, double bottom. Now we start to basically create higher highs, and then it becomes a triple bottom. So, and the last two big candles of this move are now penetrated. We have more than 3 candles making higher highs, higher lows in a row. 1, 2, and then we have the correction here, and then another high, another high. So basically it's building a good structure of buyers. It does look great with the holding supportive area as well. It looks very promising. And yet, in times, the market would prove that not enough, like in that case. So this one lost. The most important thing, when you see the market not agreeing with you, step out, okay? Accept the loss. Many traders do these mistakes and they start to fight. Maybe I'll just hold a little bit more. Maybe it will still turn around. Don't do these mistakes. Cut out. There is always tomorrow when it comes to trading, and there is always better opportunity. And here is another example, the Euro cut buy idea we've had here. So look what happens here. After a massive trend, bearish trend, here is a classical situation of the flip: low, high, low, fake low, and then higher highs. Now it's not just higher highs. Look at the candles. Each candle is massive body, making sequence of 6 candles in a row of higher highs, higher lows. Remember what we spoke about the corrections, when the corrections will take you back to the previous important lows, right? Same with big candles. When you have big candles in a play, their lows become the significant important opportunities to look for rejection and trend continuation. And that's what happens here. Big candle low, right? If the price pulls back, that's what I'll be looking for, the opportunities. And this is where it comes in play, right? And starts to, boom, break the highs. So this is an amazing understanding that, yes, the buyers are likely taking the control again. Look at that, the big candle, right? They are several in a row. I don't count this one because the spikes here are bigger than the body. I don't count that one. But this one is important low. This one is definitely important low. I'll be looking for my opportunities here for the price rejection. And as soon as we flip and we start to make the higher highs again, this is a great sign that buyers are likely stepping in. So this is how I work with the price reading. Now, again, you can see I showed you that in candles read and in swings. Now, look what happens here from swings, right? Low, high, fake low, and then higher highs. Now, look what happens. This high is broken, but also this high is broken, right? And also this high is broken. Where are the lows of these highs? Like before these highs, one low is here, and this low is right here, right? So that's the zone for me in terms of swings to pay attention to. That's the zone for me here and here to pay attention to in terms of the candles. You see that? This is my action zone. Here I am looking for the price to stop, reject, and make higher highs again. When it does, that's my indication that there is a good chance the buyers are taking control. And as long as this zone holds, I'll be looking here to ride the buyers. That's it. Okay? And it's very, very, very important to understand this logic. It always follows on every time frame. Of course, the lower time frames are noisier, but it follows everywhere with every instrument because it is simply pure representation of price reaction. Who stands behind the price? The traders. What the traders do? Buy and sell. What the price represents? Their actions, their transactions, highs and lows, and the sequence of that, if it's in terms of swing highs and lows or the candles, help us to understand this reading. And when you implement that in a multi-time frame analysis, like I do with my techniques, which I teach in Traders Academy Club, you get yourself good opportunities and much improved odds in your trading. There will be no 100%. Don't even try to chase that. I really encourage you, start with working with 50+% success rate with positive risk reward and average more than 1-to-1. That's the beginning. Okay, from this moment, you can only improve, polish and improve. And if you follow these simple numbers, your money would follow as well to the upside. So I hope this video opens your eyes a little bit more to the price action and what I love to call price reaction also. And you find it useful and helpful. And to take it to the next levels in your trading, I invite you once again to join us in Traders Academy Club. You can find the links below the video in the description or in the pinned comment. And I hope to see you with us and to be helpful in your trading journey from here on. So thanks for your time watching this video. I wish you all the best. Stay safe, be well, and I'll see you soon. Bye for now.